views about the latest auto sales numbers and Institute for Supply Management's manufacturing figures?
I think I share the market's viewpoint that these have been fairly disappointing. We were really looking forward to some big benefits from the tax reform bill that was passed at the end of 2017. One of the ways that we thought it would be manifesting itself would be through higher capital spending and business investment. And ISM specifically really did not show that and has not shown that. And this would be about the time you'd expect to see this starting to kick in. Perhaps there are companies who are fairly slow in their decision making in that regard. Maybe they weren't already planning for this, but I kind of find that hard to believe because everybody sort of got the sense this was coming. But I'm certainly not in any corporation's boardrooms that would tell me whether these corporate spending plans are coming or not. But I think by now we would have expected to see some more, or perhaps did the market just get ahead of itself in terms of what it was expecting? Both sides make sense. Auto sales also are a bit of a worry. On May 1st, we had basically most of the automakers report month-over-month sales. GM being the exception, they've actually gotten out of the monthly sales report game. And for the most part, they were down. And the question was, were they down in line or slightly better than expectations, such as Ford or Toyota, or were they a true disaster like Nissan, which was down 28% or so? In any event, these are not the kind of numbers that we're expecting to see if you're seeing a consumer-led, robust economy. I think that is also somewhat of a feature of the tax reform bill. In a negative way, is I think rather than that money being spent on workers, which was sort of the promise, not necessarily of the individual companies, but certainly a promise of one of the benefits that people would see would be your wages going up. A lot of people did get these one-off $1,000 bonuses, but those $1,000 bonuses don't really influence long-term spending. You're not going to buy a car because you got a one-time $1,000 bonus. You're going to buy a car if your wages are elevated and you see yourself getting a raise and seeing that raise stick and seeing yourself being able to carry greater debt loads, whether it be for a house or a mortgage, et cetera. And so I'm not going to throw shade on the corporate tax reform so far, but I am going to throw shade a bit on how the market probably got ahead of itself in anticipating the benefits. And I think there's so much more to be seen. I am hearing anecdotal stuff about wage pressures, and maybe those do benefit the workers. On the other hand, that directly leads to inflation. So with anything in the economy, there's a lot of moving parts. But I would certainly say that I think the market had gotten ahead of itself in terms of anticipating the benefits of the new tax law changes. And I think what you're seeing as a result is a bit of recalibration of estimates going forward. And that's the sort of thing that provides a lot of churn to a market as it's repricing itself.